what would it take for you to upgrade your opinion on this thing from a market perform, as almost everybody else at this point? And I'm not asking you to just join the crowd for joining the crowd's sake, but what would it take for you to get off of that market perform rating?
Well, look, I think as Amy said, that the time to buy stocks which I think are more cyclical rather than sort of growth stocks that are going to perennially grow at 10% plus per year is when sentiment is lower and valuation is lower. And so we would look for one or two things, and we've been pretty transparent about that. One, we would look for a better entry price because we now have Apple at its highest valuation levels since 2011 when the company was growing at 50% a year. Or secondly, we would like to see the transactional hardware model, which is still 70% of revenues and close to that in profit, so that's iPhone, iPad, and wearables. We'd like to see that transactional model be more of a service or subscription model. Then you really have a company that is a subscription-based company that deserves a dramatically higher multiple, and one arguably higher than it is today. And so those are really the two things.
You think the multiple's gotten ahead of itself 24 times forward?
You know, the multiple is very rich. I mean, look, I would have said the same thing $50 ago, and so I'm hesitant to say it now. By any metric, the multiple is very rich. It's off the charts relative to its 5-year history, which is when Apple has had more modest growth. And as I mentioned, it's trading at the same multiple when it was growing 50% a year. I mean, those are suggesting the multiple is rich, and sentiment is pretty enthusiastic.